guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. The hottest trend in DFI, what is real yield? Decentralized finance has grown into a booming industry that showcases some of the innovative and compelling potential of the cryptocurrency market. DFI has tens of billions of dollars worth of crypto assets locked up and is facing a new trend that has the propositions to disrupt the market, a real yield. The popularity of yield farming, a tactic that makes use of crypto assets and aids users in maximizing their profits, is one factor contributing to DFI continue growth. It enables crypto investors to maximize their earnings across various DFI platforms. However, investors notice that the massive inflationary intensive offered by many projects are lowering the price of their tokens without delivering long-term benefits. The current bear market and the colossal crash of Terra stablecoin show the drawbacks of the current DeFi ecosystem. Recently, a growing number of people have begun to pay attention to protocols that reward stakeholders based on the revenue made, or so-called real yield. In the article, we will look closely at what real yield is, what is real yield, and how it is generated. Real yield is derived from the generation of real revenue, in contrast to the revenue obtained via token emissions. This means that the more revenue a crypto project generates, the more yield is paid to user and vice versa. Typically, yield-bearing tokens derive revenue from high token emissions, which cause inflation and reduce token price. Real yield is derived from capturing a percentage of actual revenue that provides a potential solutions to the token's wide high emissions. Projects that qualify as real yield don't require inflationary emissions to remain relevant over time. The growth of crypto projects focusing on real yield depends on their ability to accrue new users and increase revenue generation over time to reward token holders. Real yield is a game changer in traditional DeFi. Real yield is a game changer in a traditional DeFi scheme, where the most common form of user acquisition so far was offering an accretive annual percentage rate, or APR, to boost the number of user funds deposit. The problem is that this aggressive emissions model is not sustainable, and projects have short lifespans. There is a limit to how long projects can provide fake yield before they are obliged to rethink the sustainability issues. Relying on fake yield, or in other words, token emissions, is a practice that proved highly lucrative in 2020 and 2021. The returns were broadly fueled by projects' native tokens, which would be distributed at implausible rates. Heavy token emissions are peddling TVL by incentivizing liquidity. However, once removed, the real value of many chains becomes questionable. Once the crypto markets start to show weakness, their tokens went to all-time lows as numerous projects located effective underlying value accumulation mechanisms. As long as a token's price continues rising, it supports its APR. However, in most scenarios, the price stops rising and reverses. DeFi users normally jump between projects depositing assets for the token rewards and racing the cloud to get rid of them before everyone else does. The project is then forced to emit more tokens to hold up its yields and retain its ecosystem. However, this further devalues the token, scaring off more investors and alerting the collapse of the ecosystem. How to determine real yield? A real yield project earns more money from revenue than token emissions and operational costs. Like in any sustainable business model, the project should earn more than it spends. To determine which projects make a real yield, you should research. In crypto projects, the entire reference information is on-chain, which makes it accessible. Here are the steps you should take in order to determine the real yield. 1. Use online tools. Token Terminal is an excellent tool to check the total revenue and other metrics of the crypto project. Another helpful tool is Measure, which help to show the token emissions. Next, number 2, checks total revenue of the crypto project. On the token terminal homepage, select metrics, then protocol revenue, and search the protocol you like to analyze. And last, check token emissions. On the Measure homepage, pick the wanted token, navigate to profile, select token economics and supply schedule. Calculate the number of tokens emitted in the same time frame as you pegged while determining the total revenue of the project. You should focus on incentive-based token emissions only. Maybe that's all from me. Thanks for watching. Don't forget to like, comment, share, and subscribe. Bye bye.